Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, November 30th, 4:32 p.m. Eastern Time, coming to you from Mantua, New Jersey. With tonight's Revere Market Insight video, State of the Market. We've seen a whipsaw over the last couple of days, actually over the last three sessions in particular, starting with an ugly Friday, the day after Thanksgiving, on the new COVID variant, which was called new for about 12 hours and then changed to Omicron. And then over the weekend, the news kind of trickled out that it really may not be anything to fear as far as a health severity standpoint. And we saw a nice bounce back on Monday. Monday after the close, however, Moderna's CEO came out and said that he was concerned that their vaccine would not be effective against this new variant, even though during the day the Pfizer CEO said he expected it to be effective, but maybe not as effective. But regardless, the market took a big dump overnight. We opened up we were down quite a bit overnight, almost 1.5% on the S&P. Strong comeback into the open, but still a gap down 0.6% on the S&P, and recovered nicely. But then Fed Chair Powell was speaking today, and the issue of transitory inflation came up, and he mentioned something about we might as well retire that word. And at 10:35 Eastern time today, it's very clear on a chart, we started selling off, sold off sharply, a little bit of a bounce late afternoon, but a weak close. And to summarize it, you can see the damage here to the indexes, everything down over 1%. So let's go with let's start here with the G5. G5, really not that bad when you consider that growth stocks are typically more volatile than the market. But today, value underperformed growth across the board in large cap, mid cap, and small caps. G5 still down 1.92%, S&P down 1.9%, Nasdaq 100. Which led early on strength in Apple and Tesla, still ended up down 1.5%, Dow down 1.9%, midcaps down 2.6%, Russell down 1.9%. Oil and banks got beaten down hard today, but all 12 or all 11 of the S&P spider sectors were lower. The only green on my screen, aside from a couple of names which we'll talk about, were biotechs and bonds. So let's check over here on the trend gauge. We flipped the arrows reflecting this whipsaw that we've seen. We went red arrow on market leaders and short term on Friday, back to green after Monday, now back to red. We've got all indexes now below the 21. We had the first break of the 21 for the Nasdaq 100. We get a second close below that, we'll go to bearish or downtrend on short term. Leaders, a lot of them taking hits also. We punted half of the 21 over 21 last Friday. Another 25% of them are below the 21 as of the close of today. Medium term, the S&P bounced off the 10-week, still above the 50-day. The 10-week moves a little slower than the 50-day does. And we're showing yellow arrows here, but more carnage or a break below the 50. We weight this about 60 to 65% between the Nasdaq 100 and the S&P 500. So either of them gets a close, two closes below the 50-day, we go to neutral. They're both below them. We're very clearly bearish, and we're battling at the 200-day moving average with small caps. We'll take a look at all these indexes in a while. Very important to keep tabs on what's going on with the indexes, because 75% of all stocks follow the overall trend of the market. So let's dive into some charts here. But first, let's dive into The team here at Revere, we've got quite a bit more defensive today as our stops got hit and broke key support areas on moving averages. This is the most cash we've had since the beginning of October, late September, early October. Really, cash isn't what's important. What's important is what your exposure is, depending on how volatile the things are that you own. So I'll talk about that in a little bit. But if you're interested in this approach that gets you out of the way when the market gets weak, this is especially critical as you head into your retirement years. Give us a shout. You can email any of us. It's our first name and then at revereasset.com. So that's Dan, Tim, Hunter, Muriel, Alex, or Don at revereasset.com. Or you can call 855-REAL-WEALTH. That's 855-732-5932. Let's check on the Fear and Greed Index very quickly. This is now showing fear, which actually is good since the market's selling off. You want to see fear if you had extreme, if you were still bullish or greedy, that's complacency and not good news. If there's no fear, you do want to see some fear in the market, but that by itself certainly doesn't put it in a bottom or make us buy anything. CBOE, put call ratio closed. You can see how it weakened here after Powell spoke. Closed at 0.94. That's also a high reading, which is contrarian bullish, although there's not much bullish action to be found here. So let's go through the market facts before we dive into the indexes here. So dollar continues to be a headwind, although it did pull back today. And then, of course, we've got COVID and inflation fears, which certainly we added this to headwinds today after Powell speaking. Put call high, fear and greed is there from a sentiment standpoint. So those aren't really hurting the market right now. Reviewing our bull case, as long as we stay above the 21 and the 50, we're bullish, but now we've broken the 21 and we're testing the 50-day moving average on the S&P 500. We'll take a look at that chart momentarily. Bear case, should we fail our prior breakout, which is the all-time high of 45.46, and we're now 21 points away from that. The bears will have the ball since then. We've seen many a goal line stand by the bulls this year. See if we get one more or not. So mention the action, gap down, recover, rollover, close near the lows on Powell. Talked about the Moderna CEO. Portfolio changes today. You can see here we came in with an adjusted risk of 1.37. That means the S&P 500 by itself is 1.0. If you have a 60-40 portfolio, it's about 0.6. We're all the way down to 0.65 after trimming some trade desk, selling our long Nasdaq 100 after Powell sent stocks to the downside. Stops hit on New and Etsy, and we added a hedge 10% on SPXU, which we do. We hedge half of our SSO position if we're below the 21. We hedge the other half if we're below the 50. So half of that of our SSO position hedged now. We get back above the 21, we'll take it off, very similar to the way we did on the gap up on Monday. But it's okay to be wrong. It's not okay to stay wrong. And when we broke back down today, we put it back on after taking it off on Monday after the initial weakness on Friday when we first put it on. So bonds really the only positive today. Broad weakness across sectors, especially oils, metals, software, and banks. So here's our key levels. We're at 45.67 right now. The 8 and the 21 have rolled over and are falling now. And another break below the 21. Next level here, the breakout pivot, the prior all-time high at 45.46. Right below that is the rising 50-day moving average. So let's get to the S&P 500 chart now. I'll blow this up a little bit, and you can see here's the COVID variant gap down, brutal sell-off, down 2.3% on Friday. Here's the recovery and close right above the 21. Got us out of our hedge on Monday. Just following the rules. It's a mechanical system. as far as this goes. Break back below, we put the hedge back on today. Notice the 21 I said has rolled over. The 8 is going to cross through the 21, so we'll have a negative cross the short-term moving average and the intermediate-term moving average. Or ultra short and short is what I actually should say. You can see here we're still 0.7% above the 50-day moving average, and then 6.3% down to the 200-day moving average. So there's your S&P 500. Note the rollover here the last couple of days in the stochastic. This is a reference point for when we get oversold and maybe looking to bounce, but as of right now, there's quite a bit further way to go down relative to where the index has been recently. Here's your Nasdaq 100. Closed below the 21 here on Friday, back above it strongly on Monday. Close actually 0.1% above it after undercutting it today. A little bit, so some money came into Apple and Tesla headed into the close, NVIDIA also, and that got us just back above the 21-day moving average. But this is very clearly the exception and not the rule. Note how the stochastic has rolled over on the Nasdaq 100 also. Now let's check the Dow Jones Industrial Average. Below the 21, below the 50, sitting right above the 200-day moving average. See if that provides some support, although CRM after hours is down, and that's going to be a little bit of a drag on the Dow. So that's a higher price stock at $285. MDY mid-caps gave up the 21, gave up the 50, sitting right above the 200-day moving average. IWM. Now 3 closes below the 200-day moving average. Very clearly you can see the rollover here on the 21 and now the flattening 50-day moving average. So very clearly now a failed breakout out of this base on IWM. We are oversold, however, but rates falling due to money flowing into bonds. The fear trade is going to impact banks, and oils with the supposed thought that there's going to be a lack of a demand because of this COVID variant. We'll see how that actually ends up working or not working. But right now, that's what the charts are showing us, and that's what we're going to go by. I mentioned CRM. Let's take a look at that quickly, as that is down after hours. CRM. You can see here it had rolled over along with the market, close below the 50-day moving average today, and after hours down 6% at 268 after hours. Let's get rid of the stochastics here while we go through these. And let's get the charts back too. Okay, so here you can see after hours down 6% on CRM. How about a couple things that are working after hours? Zscaler. This is on the 21 over 21 list, and it's up 5% on earnings after hours. We own Ambarella, still a small piece of this, and this is up very strongly after hours, up 11%. So that's going to put it back above all the way up near 200, challenging all-time highs if this stays. I got to keep an eye on how volume is for this, but buying strength in a market correction is usually not advisable, but you can see this thing's really taken off. So that'll give our portfolios a little bit of a boost to kick off January. Some other stocks that we still own that are holding up very well. Tesla, very clear leadership here. In fact, anything still above your 200-day moving average should be considered a leader. Tesla up a little less than 1%, hasn't broken the 21 over the last 2 weeks, while the market has really come apart. The big leader, Apple, we still own this also. All-time highs for Apple, amazing relative strength over the last 2 weeks, and really the market seems to be treating it as like a money market, flooding cash into the safety of the biggest market cap with a reasonable PE of 29, and of course their products are everywhere. let's take a look at you. This is something that's still on our list of things to possibly buy. Also, 21 over 21 list, holding up pretty well. It was actually positive today, although it did now get a second close below the 21. Let's see what happens. I mentioned a handful of them are now below the 21 from Friday's list. Let's see what happens when Friday comes around. Something else strong today, Ethereum. Up the ETN up over 5% today, as that's probing all-time highs. And let's take a look here at TLT. We went from interest rates being from TLT dropping and interest rates being a problem to them going to the top of the range and possibly the TLT breaking out, as I mentioned. The fear trade, money flowing into government bonds. We're at the top of this range now. You can see I've got an alert here above the 152, around 152-ish level to see what happens. Let's show the TNX chart. Here's your 10-year. This, you can see dropping, went from the top of the range, heading for a breakout around the 1691 area, dropping all the way down under the 200-day moving average, right above 14. And let's take a look at the dollar, as this pulled back today, but still very volatile today after Powell spoke, did pull back, held the 21. Not sure what the thought of inflation is going to be on the dollar, but you got to remember, if there's inflation in the U.S., there's inflation everywhere, and the dollar is being measured against other currencies, and if you can find a safer one, do it. That's going to wrap it. As always, love to hear any feedback from you. I'm on Twitter at Vandenbord, email don@revereasset.com, phone 855-REAL-WEALTH. Let's go back quickly to the S&P 500 here. We're less than, the stops that got triggered today, we're less than 2% from a total exit on all our portfolio positions, or at least being hedged to where we're effectively neutral versus the market. So we had a 13% move in GROTECTION off the bottom from the second week in October. We've pulled back about 6% of that. So we're always targeting to stay within 8% of our all-time highs. So our stops reflect another 2% pullback in what we own, and we'll be out of the market. And that should coincide with a break of the 50-day moving average. If the 50-day breaks, we've got quite a few things that are still holding up okay. We'll see how they survive the next couple of days in the market. So closing the deal on November and also on Tuesday, November 30th, this is Don Vandenbord telling it like it is. Thanks for listening and have a great day.